Thank you, Marie. Ladies and gentlemen, good evening. Welcome to all of you to our annual conference here in Brussels. This is an important moment because this is a moment in which we are going to speak and we are all together in order to discuss about the competitiveness, not of the asset management industry, of the European economy. And what is the role, what could be the role of the asset management industry within as a contributor to this, let's say, global competitiveness, which is just key, which is just key. Because finance, let's say finance as a whole, and asset management are not just a concept, or let's say invisible actor, as we sometimes we call it in France, but we are just there for enabling business to grow. So it is what channels savings into productive investment. And the strong competitive financial industry is just essential to provide European savers with the right product and the right solutions, more and more solutions than product, in fact, to ensure the businesses from SMEs to global leaders have the financing they need in a sustainable way, and to preserve also European sovereignty, because at the end of the day, we just speak about sovereignty. So we should not make any mistake when we speak about, let's say, competitiveness, finance, blah, blah, blah. European financial strength is just strategic for Europe, exactly as defense is also strategic for Europe. So we call for this wake-up of Europe already for years, and we are very happy to, let's say, to notice that it is now in the hands and in any speech in Europe. Very happy for that. Just a year ago, as you were just reminded us, Louis-Marie, we are already there in Brussels for our conference, and we were sounding the alarm on the unprecedented challenge, I would say, facing European Union. Europe must navigate ecological, demographic, and digital transition, aging populations and rising pressure on retirement systems, of course, and as a consequence, a massive investment gap that threatens our global standing. The European Commission itself estimates to about 745 billion, let's say 750 billion annually, the cost which will be required by 2030 to meet these challenges. So this is not tomorrow, after tomorrow, in the future. This is today, and this is the reason why we have to act today. Since our last conference here in Brussels a year ago, we had the pleasure to have and to contribute as well to Noyer, Letta, and Draghi reports, reinforcing two urgent imperatives: redirect private savings into European corporates, securities to boost competitiveness and finance European future, first point, and secondly, build, of course, strong long-term saving solutions as the public replacement rate decline. For sure, we absolutely need to create in Europe, and this is, I would say the roadmap is very clear. We need to create in Europe the virtuous cycle which has been created in the US already decades ago, which is savings, investment of savings in innovation, transition, let's say at the end of the day in corporates, so improving the profitability of the corporates, making, or let's say offering higher returns, investing in the economy, and the higher return, let's say, drive new savings and additional savings. So this is the virtual cycle, and this is exactly what we need to create in Europe, and which does not exist at all for the moment in Europe.
Not at all. So sorry to say that, but we have everything to be built in a very short period of time, but I think we are all committed to do that. At the 2025 World Economic Forum last month in Davos, European Commission President Ursula von der Leyen delivered a stark warning: 300 billion euro in private savings leave the EU every year. Okay, fine. We all have that in mind, but what do we do with that? Because this is just a structural failure. 300 billion leaving EU every year for, let's say, investing and financing innovation and transition everywhere in the world, but not in Europe. This is just a structural failure. And sorry to say that, but it has nothing to do with the cost of the product, with the cost of the asset management. Nothing to do with the cost. It has to do with the expected return that you have coming from the savings. So, of course, we welcome the European political priorities on competitiveness and simplification as well, but welcoming priorities is not enough. We need action. And if we want to build a strong financial economic system, this is what we, of course, what we want to build and what we need to build, we must stop we must stop the accumulation of regulatory burdens that weaken rather than strengthen our industry. I will just take an example, and I will speak about just a few words about retail investment strategy, but which is just a new step in the wrong direction. Just a new step in the wrong direction. So before maybe thinking about simplification on what exists for a decade, maybe we can just stop, let's say, the accumulation of new rules which are going in the wrong direction. And because why? Of course, the objective, let's say, to build retail investor participation and hence protection of the savers are commendable, for sure. But instead of encouraging participation, they introduce new barriers. Instead of fostering innovation, they create, let's say, additional red tape. And instead of strengthening European financial sector, there is becoming yet another break on our competitiveness, no doubt about that, by introducing price regulation while increasing the cost of doing business in Europe. This is exactly the wrong way. This is the opposite way that what we should do. And this is the reason why, at AFG level, we push for bold and pragmatic reforms. Bold and pragmatic reforms. First, simplify regulatory framework to make the EU a more attractive place to invest. This is just basic, just basic. How to invest in Euro in a better way, and to attract new investments. Create an invest.eu label, I would say, for national saving products. We need to support by favorable tax treatment to encourage long-term investment in Europe. And also, let's say, to start implementing this virtual cycle I was speaking about. You need tax, let's say, treatment, tax advantage at the beginning, at least for, let's say, starting on the engine, just starting on the engine. And in five years' time or 10 years' time, we will stop this tax advantage. But at the beginning, you need that in order to create the cycle. These are just real and achievable solutions that can bring real benefits to savers, business, and European economy as a whole. In order to, let's say, to participate to the proposal and not just to, let's say, to say we should not do that, we should do that. No. In order to participate to the debate, we release today two important studies that reinforce this urgency. The first one is the European Savings Observatory study This report analyzes the incentives for long-term savings across member states, and it tries to identify the concrete opportunities to boost household participation in the stock market. And the second one is the AFG study on the asset management industry, highlighting the fact that the member state with strong asset management sectors investment on the, let's say, in their countries, invest a lot in EU economy, much more than the one, let's say, which are located abroad, for example, just as an example. And the second one is that and this is the key point, let's say, among the investment performed by these firms, the SMEs are strongly favored also by these firms which are located geographically in these countries. So this is just key, because otherwise we will just, I repeat, we will just continue to finance, and why not? But this is a choice. We will continue to finance innovation, transition abroad, and we will just have to buy any product made abroad, but it is not a sustainable model. It is not a sustainable model at all. If you are just a population of customers and not producers, I don't know how long it could last, but it will not last for long, that's for sure. We have the capital in Europe. We have the capital. We just need to ensure that it is invested in Europe in the right way. And investing in Europe in the right way doesn't mean that we have to protect Europe, or that we have to, let's say, to forbidden any investment abroad. Not at all. Competition is there, and competition has to remain there, open competition. But at least at the beginning, as a minimum, we need to ensure, let's say, this level playing field between the competitors. And this is not the case for the moment. So this is time to act. AFG is fully committed to driving this transformation, because we must channel long-term investment into European economy. We must remove regulatory and structural barriers, and we must reclaim the capital and the competitiveness we are losing on our soil. The path forward is very clear, and I remember that we had already this speech and ideas for years and years, Eric. By aligning policymakers, industry leaders, and member states, we can build a strong European savings and investment union. But we cannot afford to wait. This is time to act. We strongly expect Europe to move now. We are ready to support this movement. Thank you all, and thank you for all your contribution to this big move that we have to make all together. Thank you.